Hello, and thank you everyone for attending today's webinar, 6 Practices to Win and Wow Customers. My name is Mary Carl from 451 Research, and I will be your moderator today. Presenting on today's webinar will be Cheryl Kingstone, 451 Research Director, Jim Maroos, owner and publisher of Digital Banking Report, and Sarah Johnson, Global Industry Consultant of Kofax. Just a couple of housekeeping items before we get started. After the 3 presentations, we will have a brief Q&A period. To submit a question, please click on the question button within the webinar interface. We will try to get to as many questions as possible, but if we run out of time, someone will get back to you with an answer after the webinar. In addition, a copy of the presentation will be made available to all attendees. We also ask you to provide us with feedback that you may have from today's presentation. Okay, so with that, let's get started. Cheryl, take it away.
Thank you very much. And welcome to today's session, and it is all about the digital revolution. And it's happening today, and it's not just about the consumers, it's a lot of businesses, and we're going to go through the impact that this is having on your organization because it touches the entire company, and it is all about digital services and processes so that you can capitalize and meet customer demand, and that's what is underpinning the revolution today. And so what you're here to talk about and here to listen to has to do with what are those 6 best practices. And the way we look at it is that financial services or institutions, whether it's banks or insurers, really need to think their approach around these 6 areas. One really is, and we're going to go through this in order today and give you some solid examples, but it's about benchmarking your current processes. So the data and both internal and external sources, real time, and what you really need to do to understand and where you are today so that you can create a plan to address a lot of those friction points, which is next, so that you understand all the customer friction points, you understand the risks, where it's going, understanding the gaps, and how to put a plan in place. And so that's what's next, is how you plan and you collaborate. And so, just moving there. And so when you plan and collaborate, that's where you can then understand and understand all your technology options that you want to invest in. So enterprises are investing in digital tools to improve the customer experience at every step, but you really have to understand, again, what the benchmark is, what the friction points are, the plan to make that happen, and then that will help you understand what all your technology options are. But it isn't all a big bang approach. You have to make sure that you're thinking agile. You want to be able to start small and develop quick wins. So we're going to go through all of this, but most important, you also have to make sure that you're measuring so that you can continually understand how to fix and correct for that feedback, because you either want to empower the staff to make changes that are going to impact that customer experience, or you really want to make sure that you are measuring the right processes to improve the overall experience in the end. And so what we're going to do now is really go through these 6 best practices and how we're going to really ensure that you're ready for that digital era. And so when we talk about benchmarking really is about a 4-pronged approach, right? So you want to understand what that digital experience is. And so at 451 Research, we have an approach where we take a look at the digital experience, organization, platform, and operations. And this is really part of that benchmarking process because it really isn't all about the technology. What's most important is to understand what's going on with your customer experience, whether that be mobile first, your omni-channel engagement, what you're doing for contextual applications, but the digital organization, how are you ready for it? Do you have a disruptive attitude? Does your organization embracing it? And we're going to go through a lot more of that later too as you plan. And then the technology, the digital platform, what are we doing as an organization to make sure that our infrastructure is agile? Are we taking a look at some new technologies around machine learning? If we're talking about DevOps, are we embracing microservices? And some of these technology platforms can really underpin how we're then moving forward with digital operations. And a part of the outcome today we're going to talk about on digital operations has to do with customer onboarding. And so that we can eliminate a lot of that paperless communication. We're making sure that we're communicating in real time, and we're providing some prescriptive guidance. And we're going to go through exactly how we can really understand some of the approaches here on how to measure and create a benchmarking process. And Jim, you have a recommended similar approach on this.
Yeah, thank you. I think what we have found is over time that when you measure different parts of the onboarding and the new account acquisition process, you're sometimes surprised by what you find. So what you find out is that it is sometimes not what you like to see. So what we find is that when you're looking at different things you should measure, you need to measure where your organization is today. You have to check on what the attrition rate is. And we're not just talking about the attrition rate of your existing customers. We're talking about your attrition rate of your new customers as well. So the attrition rate of the new customers is several times greater, significantly greater than your overall customer base. You want to also look at where do people break off the process? Where do they break off the process with regard to the onboarding process? Where do you have breakage in the onboarding process along the cycle? In addition, you want to understand more about customer satisfaction and employee satisfaction, but you need to do this with regard to the digital engagement process. So most organizations we see that have not embraced a onboarding process really haven't seen how big the problem really is. On the next slide, you'll see what I was mentioning before, which is all about the engagement in the breakage abandonment rate process of the website application. So what we've seen is that the engagement and the abandonment rate, not only is it fairly large overall, but what's probably more alarming is that there's a full 52% that either don't measure or they just don't know. And so if you don't know what your problem is, if you don't realize that a lot of people are visiting your website or visiting your mobile app or trying to open accounts and then give up because they no longer believe that you'll get them to the end point, or you make them go to a different channel. So you make them go from a mobile application to a branch to either verify their identification or to fund the account. And that's not going to work, and especially it's not going to work for your digital customer. On the next slide, we show what has happened in the digital customer base. What we have seen is that between 2012 and 2017, the number of people that are using not only digital channels but multiple channels has increased significantly. And these people do not have tolerance for the lag, for the friction, for the challenges of opening an account. They want to be able to do it all in one place without having to fill in all the data. They want pre-fills. They want guidance. They want the ability to touch their phone or their computer a minimum number of times so that they can open an account in a seamless and easy way. So what you need to do overall is we have to make sure that we really address the digital consumer. It's obviously going to pay off well for the non-digital, but it's important for the digital as well. I'm going to now pass over to Sarah.
So Corona Financiera is a company out of Brazil, and they put in a capture, workflow, and robotic process automation onboarding system to basically deliver a better experience to their customers. Their original application process or old process was taking 3 weeks. There was potential for errors. They were mailing cards out, which created some fraud risk that those cards could be intercepted. So they first went about, when they went to their process to implement this onboarding solution, they went and they benchmarked their current process. So they knew 3 weeks, potential for fraud, how many errors do we have, and those types of things. The onboarding solution included the ability to capture documentation. So they're immediately grabbing things like identification, proof of address, bank statements, running credit, and then they're running things in the background like know your customer checks and different things like that. And they're able to then, on the spot, give their customers a bank card, but they did something unique that made them a little different in their market, but they did a bank card combined with a transportation card. And what they were able to get back from that then was kind of the metrics that measure that secondary piece. But starting with the benchmark, had they not benchmarked in the beginning, they could not have measured their success in the end, that they were able to hand these out instead of in 3 weeks in 10 to 15 minutes. And that definitely improved their place with customers' view of doing business with them. It made their process faster. It made their process more secure. And it also made their process greater than 50% less expensive to complete the operational side of things. So with that, Cheryl, will you talk to us next about the front and back end systems and how that affects onboarding and banking and insurance, what that friction between those systems creates, or how we handle that as we're trying to digitize our processes?
Absolutely true. And it's our next area that we really want to talk about, which is the friction points, because it's a pain point that everyone is trying to address. And the problem is inhibitors of today's platforms are really what's stopping it. So the next area we're looking at, and we're going to spend a few minutes on, is friction points. So we need to stop asking customers to adapt to company processes and technology constraints. Sarah mentioned this, Jim's mentioned it before, but the problem we've seen is that businesses are primarily investing in systems of record, and those are sometimes older. They're legacy, they're CRM, ERP. It's really capitalized in a lot of those older technologies that are monolithic. And while these systems are critical for managing internal operations and processes, they're monolithic, they're expensive, they're time-consuming to modify, and they really make it unsuitable for today's pace of change. And so the customer experience demands an approach that takes into account like new tools and processes and the data across the customer journey. And the complex processes usually involve dynamically maintaining a single source of the truth and understanding how to create more personalized engagements. And so that's where we take a look at systems of engagement. And these tools and applications are designed to automate more of that customer-facing processes. And a lot of times they tie to the old systems of record so that that intelligence isn't lost. And these can be leveraged positively rather than inhibiting a good customer experience. And so these systems of engagement need to be able to take all advantages and provide and improve that customer interaction that is going on in today's pretty much we need to enable a frictionless environment. But to do that, that's really where we're taking a look at new platforms. And so if we take a look at the systems of record and we break down that barrier and we move forward and embrace more systems of engagement, that's really when we have to understand and complement those systems of record with systems of engagement so that the businesses can provide more of that what we call an interactive, personalized experience. And enterprises can streamline the processes for customers to ensure that the systems that are used for customer engagement enhance those processes and provide more of an accurate and reliable information that is potentially even aggregating and interacting with those back-end systems of record. And it's all about leveraging a digitally transformed platform to reduce customer and employee friction points. So, the business applications really do need to evolve to be more agile and real time, and it really has to leverage some of that back-end foundation to handle the core processes, order management, inventory pricing, all those other back-end systems contain that necessary data. And Sarah, you do have an example here that you wanted to go through a little bit on how we're going to break up the systems of record with the systems of engagement. Or not. Sorry, I'm just going to move forward and bring forward just one more discussion around the digital engagement and how it's all about identifying friction in digital channels. And so here's some customer information and some data that we have at 451 Research. And what's most important here is to understand that customers want these digital channels. And when it comes to things like self-service, they prefer self-service tools to avoid calling a customer service agent. And I'm not saying that we have to avoid our contact center, but a lot of times we can pre-process, we can help them serve themselves, especially in some low-hanging fruit. And the technology is becoming increasingly central to how individuals experience the world around them. And it is shifting the center of gravity from businesses and individuals in an unprecedented way. So we need to cater to these users, to their preferred ways of consuming information and engaging with brands. And one of the strategic value propositions has to do with mobile and how we're going to communicate in a mobile channel. But the fact that these 76% of customers preferring these digital channels, what's most important is that 42% state that the prerequisite for future loyalty is the ability to resolve issues in digital channels. So it really is all about the digital divide and understanding how we're going to improve these friction points with these new digital channels. And so now we do have a case study, Sarah, that you can talk about here around friction points and the digital channels.
Sure. So we have a Kofax customer. This one's a gap insurance provider, and they had a manual claims process, which presented some challenges and some friction. But then they also had another problem where they were growing rapidly, and they were having slow responses to their customers based on their manual process. They used automation to solve some of those frictions and improve the slow process that was offering that poor service. If you notice here, there's a quote, and I just want to highlight part of what the VP of Operations said. He talked about this solution being a game-changing differentiator, that providing a digital experience for customers to purchase and submit claims made it easier to do business with them. So they took their frictions and they used automation to solve those problems. They identified those frictions, used the automation to solve the problems, and turned those negative frictions into a positive by using an automated solution. So they sped up the operational process. So sometimes we think friction and we think onboarding and we think all customer facing, but really their friction was in how they were operating on the backside and the level of service that slow operational process was pushing forward to those customers. So when they automate that, they increase their customer satisfaction rate, they reduced the amount of times and touches they had for claims, and ultimately then had a positive solution that made a game-changing differentiator for them in their marketplace. So going forward, we're going to talk a little bit about planning and collaboration. So when you think of planning and collaboration, and you look at this slide, what stands out to me and kind of what's most important is if you put yourself in the customer's seat and they have to interact with your customer or your company, whether it's a bank, whether it's an insurance company, you have a process, and that process has multiple steps. It involves multiple people and multiple departments. And the customer could be coming in, they want to come in on their cell phone, they want to come in on their computer, they want to come in from their iPad or their tablet. And in reality, to them, they just want to get from A to Z, with as little friction as possible. And so then our job becomes, how do we plan and how do we look at that customer experience where they're going from step to step to step and department to department to department, dealing with different people in different areas? How do they go across all of those different pieces with as least friction as possible? So then our job becomes taking a look at this. How do we break down the silos? You heard both Cheryl and Jim talk about the digital organization and some of benchmarking. And Jim said, sometimes when you benchmark, you're surprised at what you find. I happened to be at a company event last night at a baseball game and was talking to a couple of different customers who said something that kind of struck me. And I thought, here we are doing all this work to break down the silos and create a plan where you have this enterprise customer, experience and this enterprise solution that's, frictionless. And they said to me, our technology division is, holding tight. If it doesn't go through them specifically, they will kind of poo-poo whatever we're trying to do. And I thought to myself, wow, they're holding up the silo walls. And Jim said, sometimes you'll be surprised by what you find. And we talked about, Cheryl talked about having that digital organization. You really need the support and the buy-in across your organization as you begin planning your customer onboarding and your automation. You need all of that support in order to go across those silos and work together. So when we look at the next slide, we're talking about discovery, discovery meetings. And so in discovery meetings, that really is benchmark and identify friction. So you're trying to figure out, take a look at our process. And don't forget to take a look at it from the customer's point of view, because those are the people we're trying to reach out to please and increase that satisfaction so that we're increasing sales and reducing costs. Then we're gathering subject matter experts. So that's that break down the silos. It's having that culture, having the support from top all the way down to the people who are doing the business in the back office every day. You need those experts. You need to get their feedback as you plan, and then you need to, when you identify the areas of business value, you're looking for quick wins. And we'll talk a little bit more about quick wins here in just a minute. And then you're going to present the results, both of your plan, and after implementation, you're going to present the results, and then gather feedback and measure. And so that's one of our steps that we're going to talk about more here in a minute as well. But you're going to measure the feedback both internally and externally so that you can then make adjustments, if you will, to that process, and then be agile and continue to automate. And so those quick wins are going to become important. And sometimes we think of automation as, A, B, C, D, and it doesn't always work that way when we're looking at quick wins, and we'll talk a little bit about that shortly, but sometimes those quick wins don't have you starting at step 1 or A like we might think sequentially. So moving forward, Cheryl, can you talk to us a little bit about the difference between banks and insurers who have a plan versus companies who are still operating in the silos and maintaining those silo walls and having a disconnected digitization projects type of situation?
Yeah, exactly. So who is planning? This is some data that we have at 451 Research that takes a look at the stages of digital transformation. And when we look at that, while 1/3 have a formal strategy, but only 29% are actually even in the planning stages, right? So that leaves about 1/3 having no plans at all. And so that's really important when you're looking across the data of who's making plans and who's not. And I will eventually go through what the impact that has. And these are just in the financial services industry. So this is the banks and insurance companies and wealth managers. So this is strictly your industry today. And so less digitally mature financial services organizations tend to focus on individual technologies and have strategies that are more tactical and operational in focus, and you'll see why coming up. And as compared to more forward-thinking companies that embrace digital with an eye towards transforming their businesses across the entire organization. But what that needs is, again, what we said earlier, is strong leadership with a disruptive attitude. And that's necessary to guide the organization through these rapid changes of planning, understanding the friction points, understanding the technology, but mapping that to consumer behaviors and your customer behaviors and business models. And it's really a journey that forces a company to move beyond that business as usual to embrace organizational change, agile business processes, and the systems to support that transformation. And so the fact that 1/3 have formal strategies is great. The fact that 29% are at least planning, but again, there's 1/3 of you that really have done nothing today, and we really have to understand where that's going. But as an industry, and then understanding your world outside of that industry, when we take a look more globally and understand companies that have no strategy whatsoever versus companies that have a formal strategy, think those 1/3 that have a formal strategy coming up. Yes, everyone is looking towards competitive differentiation, but if you have a formal strategy, you are significantly ahead of the game because 67% are really prioritizing competitive differentiation in formal strategy as compared to 34% of ones that have no strategy. So that's a major difference that's going to make those, I would say, digital laggards behind. What's interesting enough is when you cut it across business size, when you look at organizations that are under 500 employees, that's really where the cutoff is. So even the mid-market is embracing a lot of these formal strategies versus no formal strategies. So there's a lot of companies of all sizes that are really taking a look at how to digitally transform to meet customer expectations. And what I said earlier around understanding the tactical nature of it and an operational focus is clearly in when you don't really have a strategy. I mean, there's nothing wrong with understanding the risk of social networks, but it's still very siloed and very social, tactical in one department, as compared to more formal strategies that are really applying things like managing data growth and how they're going to use that data for the future. And that's really what is going to, you'll see come up when you take a look at measuring and understanding how the impact of planning comes in. And so the data growth is there to capitalize on, and that's some differentiations that we see in the industry. And then another thing to point out has to do with the use of IT as a strategic innovation plan and process. And so if you are under a formal strategy, one of your priorities is really using IT as a strategic differentiator and using it for more innovative approaches. And while everyone's looking towards that, if you have a formal strategy, you're more likely to understand the impact that that has on your organization. And most interesting is financial services is ahead of the game from an industry standpoint. Everyone always thinks that financial services is behind, but when you really are benchmarking across multiple different verticals, the one that's significantly behind is really healthcare. It's understandable. A lot of them are nonprofits. They don't necessarily have the budgets, but it really comes down to financial services, telco, and the retail industries that are really leading the game here when it comes to using digital technologies for innovation plans. And so it really does make an important understanding about putting in, yes, these steps around identifying business frictions, understanding how you're going to benchmark, but then planning. And so that's why it's so important to understand what are companies doing. And Sarah, you understand how companies have done some of the planning and had some impact here.
So we have another Kofax customer, Union Bank, and Union Bank, while they have a digital plan and a digital strategy, you heard me talk a little bit previously about prioritizing and quick wins. And so as you build your digital strategy, and I mentioned that you don't always go step 1, step 2, step 3. Sometimes there's other factors that are going to factor in. And so Union Bank came across that, and they actually found that one of the priorities that allowed for them to have a quick win was that they had a compliance issue going on that was actually costing them some potential penalties or costing them some actual penalties. And what they did was they used their solution, and one of the quick wins they went after first was to move some large files from one repository to another, hundreds of thousands of files, and they did it very, very rapidly. But for them, that was a quick win, and it was something that obviously needed to be done, it needed to be addressed, and then it enabled them to continue on with their onboarding solution and their digital plan and their digital strategy. So it is important to take a look at everything as a whole. We have another customer kind of in that vein, I'll tell you, that spoke at one of our conferences, and he talked about quick wins, and with that quick wins and having that digital strategy, talked about having digital teams. So they had that buy-in from the top. They had all the people all the way through the processes involved. And then he talked about the value of having self-funding initiatives. So sometimes the quick wins serve as an emotional, we got it done, we feel good about it. And in business, emotional doesn't always factor in, but it's that success. It's that being able to tell the, executive team, hey, we had this success, we solved this problem, and it was a good thing. So that's when I say emotional, that's what I mean. And then it's really about that self-funding initiative. Once you find some of those quick wins, and it could be implementing mobile is your quick win, to capture customer IDs, applications, documentation as part of your onboarding process. Maybe you need, a different web portal or a different look or to revamp. So quick wins come in every shape and size. But the idea of self-funding, one project completes and provides you with enough return to then move on and do the next project and invest your time and your money there. And that's kind of what Union Bank did with this quick win for them. So moving on a little bit again, Jim, can you talk to us about omni-channel and how omni-channel factors into customer onboarding?
Yeah, I think the concern is that there's good news and bad news here. The good news is the customer wants to engage in channels that are really easier to implement and actually easier to use for the customer. They're shopping using Google. They're shopping online and using their phone for their next financial institution. Gone are the days when a customer went from branch to branch, picked up paper brochures, read them, and then came back to the winner. Right now, the winner's decided without your engagement at all. In other words, they go to the website, they go to Google, they look at 1, 2, or maybe 3 organizations. So it becomes a positioning on Google whether or not you're in the right position. But even more importantly, once they start to engage digitally, it's very important for them to stay digital. So the good news is the banks that we surveyed for the digital bank report, there was a greater number that are starting the mobile account opening process. Now the bad news is that very few, extraordinarily few, actually let you complete the process using a mobile phone or even online. And the concern there is you've built expectations. You've told them, hey, go here and you can open your account. And then at the end, you hit them with the boom, boom, and you go, hey, we need you to come in and verify your identification. We need you to come in and verify your, you have to you make your deposit in a branch. That breaks the process, and that makes it so that we have that abandonment rate we talked earlier. So what we really have to do is we have to build the process so there's a minimum number of steps, a minimum number of transfers, and it also allows you to measure it better, because what happens is if a person comes into the branch and says, I started opening my account online, but I couldn't complete it, I'm coming to do it, most organizations that we surveyed, they will restart the process and show it as a branch opening and will never make an indication that it started online first. So that messes up your measurement as well. As we get to the next slide, it's not just the account opening process we have to be worried about. We also have to think about the account engagement process. So we have to think about, once they open the account, how were we doing engaging across channels during the life cycle on the channel the customer prefers. I'm going to turn this over to Cheryl right now to talk a little bit more about this slide.
Yeah, because that's where you really have to understand across the life cycle. Exactly, Jim. So when you take a look at mobile, it really isn't, as much as we want to say, it's not just the first interaction. It has to do with mobile as an extension of your brand. So when you're acquiring a customer, absolutely, that's where the onboarding process comes into play. But as Jim said, don't disconnect that and bring them into a different channel without engaging and understanding how they really want to engage. And so that's where we take a look at mobile across the entire life cycle. And that's where, if you take a look at serving them, creating value-added services that help them really stay in the channel that they want, and then you nurturing them so that that mobile is a constant companion. Because as customers demand to interact with businesses through their mobile devices, companies really do need to respond and give them those experiences, because as we said earlier, you're only going to be creating more of those friction points right at the start of the relationship. And we do have some quick wins on how to leverage this coming up in another few slides. But what's most important is to understand how to personalize. If you don't leverage that whole customer life cycle and understand and watch what those friction points are and what you're doing to onboard them, serve them, nurture them, so that you're enhancing that whole customer experience, you're not necessarily going to be improving that overall approach. And so you have to use insight to personalize and enhance that experience. And then you can grow, because everyone's talking about quick hits about upselling and cross-selling on the mobile device, but unless you make it really as a go-to interaction channel, it will never happen. And so businesses are really looking to invest here in different technology across the life cycles, and it isn't just mobile, right? So this is where you need to take a look at all the different technologies that you have. But what we said earlier is that real-time customer engagement tools are really going to have those biggest transformational impacts over the next 12 months. And things like real-time customer collaboration, whether that be chat, whether that be video, whether that be the mobile applications for your customers, or even digital assistants and virtual assistants, social engagements. What are we doing to bring in some of the social channels? And that's really where, if you focus on a lot of this and improve the overall technology stack, the customer loyalty will then come. Customer advocacy will come. Self-service tools. That's what's most important here when you take a look at lots of interest from the customer, so that when we are using a lot of these technology investments, how are you putting it in context of improving the customer experience? And so it isn't just about social engagement on Facebook, and it isn't just about the interaction of chat or providing just a digital assistant. It's about the entire customer journey and understanding those quick wins and how you're going to bring in those mobile applications across the journey so that you are reducing those friction points.
You know, I think, Cheryl, what's important too is that if we look at that chart still, we don't have to just look at the banking industry. So it's really important that we look at how are customers now engaging with other applications. So how are they engaging with Uber? How are they engaging with Google? How are they engaging with Amazon? We're starting to see voice really take off. I mean, that rocket is a pretty good indicator. Now, so we have to catch up to the technology changes. We're going to get to a point where a person can be able to open an account using their voice. Yes, they'll still have to verify it, but with new technology, with facial recognition, and with the ability to scan important documents, we have the ability now to build engagement, to build actually a brand around the digital engagement process. So I think what we have to do is remember that this is not just the banking industry we have to look at. We've got to look at other industries that are leaders in this field, because if we don't, these are the engagement tools that the Amazons, the Googles, the Apples, and the Facebooks use, and this is where we're at risk as an industry, is really looking at those.
Absolutely, because if you look at the 32%, they're looking at Siri, and Alexa.
Yeah.
So you're absolutely right, Jim, and so that's where we have to take a look at, and retail industry is leading here. They're really embedding a lot of these social channels and social shopping and what we would say is the rise of the invisible interface.
Well, and it could be as simple as developing a digital receipt for account opening. So here's what happened when you were at the branch, and we're going to send you a real-time digital receipt for what you just did. That gives a customer confidence when they already have seen organizations getting lambasted in the media about opening accounts that weren't theirs. Let's give them a digital receipt. That's very easy to do, both in SMX text or in a real receipt basis. I think we're passing over to Sarah here. I'm sorry.
Yeah.
Go ahead.
I was just going to say I'm passing it to Sarah because she has some great examples here around automating and being much more accurate. And Sarah, take it away.
So you're hearing both Jim and Cheryl talk about real-time, self-service, serving your customers, nurturing them, and then growing your solution, your customer base, and all of that. And it's really leveraging the technology and the technology pieces. So I'm going to dig in a little bit into the technology, but we're going to leverage that to enable a frictionless experience. Meet your customers where they want to be met. So when we talk about that, a lot of times people think of, well, I'm going to, capture an image. Okay, well, great. Now you have it. You've taken a paper off of a desk and put it on a screen. But we've really evolved to now I want to capture the image and I want to use the information. So I'm not going to ask my customers, give me this document, and then let me interview and ask you the same information that I could have pulled off your document. So to leverage the information from the document. In some cases, they're going to give you their credentials and allow you to pull bank statements or driving records and different things like that, depending on whether you're doing an insurance claim or application or a banking application, that type of thing. But it's really using the information that you have, that the customer provides, putting that self-service scanner in their hand, having mobile. This could be on the web as well, so even though we're looking here at mobile, understand that wherever you meet your customer, and sometimes they've gotten in a car accident and they're standing on the side of the road, and you need to meet them there. Sometimes they're sitting on their couch applying for a loan, a card, or an account, or transacting business by moving money from one place to another. But you need to meet them where they want to be met and use the information they give you. So then I'm going to challenge you a little bit further before we move on. So you're going to use that information to do what? Okay. First, you're going to use the information to ask them fewer questions, fewer taps, fewer touches, fewer interview questions. So everything they give you, you're going to utilize that information for real-time data entry. But then you take that even a step further. So some people are only at that point. They're still working on capturing the information. Digitally, paper, doesn't really matter. Some people are already there, and the next step then is doing something useful with it. And I don't mean putting a document somewhere and checking to make sure it's the right document. That's important. But going a step beyond that, applying business rules. Do I have all of the correct documents? If I have multiple documents or multiple pieces of information, does the VIN number match what I have, and I'm going to go out and do a check with one of my vendors or a website? And so going on to the next slide, I'm going to tie that together. It's really applying business rules in real time to come up with, this doesn't match, this is a problem, this is good, we have an address discrepancy, a name discrepancy, you've reached a calculation problem where it doesn't quite fit into whatever your bucket you're trying to fit it into. And so we look at that, and it's really about data acquisition and dissemination. So we talked about disconnected systems and an enterprise platform. And so not looking for just a point solution to solve today's problem, but getting a solution that can grow with you. We talked about nurturing that customer relationship. So some of it is about putting that scanner in the customer's hand, having the ability to interact on any channel, and then you have all your back office things that make that customer experience and the process past an application or a claim where you're interacting with them, you're serving them, as you heard Cheryl say, nurturing them. Okay, there's a lot that happens in a process past just applying for something, a policy or a claim or a bank account or a credit card or a loan. And some of that then comes with you doing what we call the swivel chair process. I'm going to get the information over here in a digital way, but now I need to go out to this other system, this web page, and I'm going to duplicate the information. Sometimes it's correspondence. Sometimes it's important data. Sometimes it's doing fraud checks. Sometimes it's doing medical checks, but really that ability in an automated way to have your solution go out with or without credentials to internal systems, external systems, web pages, you name it. Sometimes we need to interact with Excel spreadsheets, but it's being able to have the system do those repetitive tasks and then show you, if you're doing comparisons, rules, missing information, checking information, have the information do the solution do the comparison, and then your workers are only going to be doing the things that require a lot of thought, approvals, different things like that. So using robotic process automation to connect disconnected systems, using the omni-channel engagement to bring data in. So you have two different vehicles to aggregate data, and then in some cases, that robotic process automation or sometimes direct integrations will then disseminate the data across those disconnected systems to make a frictionless process. So going one step further, this is just an example, a dashboard example of what your internal users are looking at for some of those comparisons. This dashboard can give you everything you need to know about a transaction, and it doesn't matter if I'm talking about an insurance claim, if someone's applying for insurance. We have cases where we have people who do workers' comp checks. Someone owns a workers' comp policy, and annually they have to go back out and gather information about payroll to update the account. So this can be servicing a customer the whole time that you have them, but it's doing those checks, those comparisons, comparing one form to another, comparing external data that you got from your customer to data that you got on your fraud checks. And when there's a problem, highlighting that in a simple visual way for your internal people to take a look at it and really automate that process so you're responding to your customers much more rapidly. Okay, moving on again, and in the interest of time, just a quick, I want Cheryl to talk about enterprise platforms, but just keep in mind, I've touched on it a bit. Instead of looking at point solutions and operating in project silos, we really subscribe to the idea of having an enterprise platform that can do multiple different things. That doesn't mean boil the ocean today. What that means is using that platform and the pieces you need now and having it well connected, very integrated into your system to fill the gaps where you don't have solutions today or where you have gaps, and having that platform really work with you and grow and scale with you. And Cheryl, will you talk a little bit more about the use of a platform?
Yeah, it's really the most important point to understand how to put digital to work in a transformative way. And so to ensure that the data and the insights are embedded into that automated process, connecting those divisions, back office and front office, exactly what Sarah was saying, to eliminate those manual processes is really what is effective for engaging with customers. So enterprises can use a platform for processes for customers to interact with to ensure that that customer engagement is sharing accurate information. And it has to sit on top of what I said earlier, these systems of records and systems of engagement, so that we're phasing out the analog and paper-based processes that these customers don't want. And they're also error-prone, and they consume a lot of manual effort. So if you embed the right information at the right time with the right processes, the only way to do that is through a platform. And so, Sarah, you do have a case study here when it goes through.
I do. So Bank of Columbia is a conglomerate financial institution. They have products in 10 different countries. To talk about trying to benchmark your processes and look through things, that had to be a little bit of a challenge. They have both corporate and individual customers, over 11 million of them, and greater than 35,000 employees. So they improved onboarding to be an innovative, customer-centric bank. That was their goal and what they were wanting to do. And they did that, and we talk about that technology and that enterprise. And again, they weren't boiling the ocean. They definitely started small, prioritized, found their quick wins. But they did that using mobile workflow, including capture. They had e-signature, process intelligence, which is it's our Kofax fancy way of saying analytics, but it's a little more than analytics, and we can get into that at another time. But they were connecting their existing systems, filling gaps in those systems, and then really automating that business process, that internal process, to create a better customer experience.
And the next area that we're really going to look at is agility. And we've been talking a lot about quick wins and systems of records and systems of intelligence, but why is this so important? And that is because if you take your systems of record that are mission critical and they have a lot of automation and operational data, and you tie that more agilely to the systems of intelligence, that's where you get your actionable insight. Then, as we talked about earlier with the systems of engagement, and you have customer-centric and contextual experiences, but if you tie that to the systems of record without the data, you'll only get process efficiencies. And so you really need to look holistically across your entire platform to make sure that you're combining your systems of record with the systems of engagement and the systems of intelligence for that dynamic experience. If you combine all three, that's really what digital transformation is all about. And that's really where you're going to get your agility and your quick hits. Because when you take a look at some of those quick hits that we were talking about, it really has to do with, again, looking at that onboarding but engagement process, but looking at it across the customer life cycle so that you're constantly engaging those customers. And some of those quick hits has to do with what we said earlier, a mobile ID or filling out the form or the ability to submit a document and understand what's going on and sign that right then and there. So customers are looking to conduct and complete transactions and acquire products through these digital channels in real time. And you can set up real quick wins to make that happen. Other examples have to do with serving the customer. What about setting up the automated bill payments and the ability to snap a picture of the bill, or the ability to have the customer take a picture and use their credit card to pay for that? All of these are really providing more of what we call those quick wins. When you're nurturing, again, a quick win is what are we doing around the customer touch points and ensuring that we're communicating on that channel that they want and notifying them of some of the changes within the channel that they want. Again, another low-hanging fruit. And then when we talked about a quick win around growing, how are we using those channels to make recommendations for new products based on their customer profile? What about reminders for reordering or if something's coming up for renewal? Rewards, a lot of loyalty programs are up there. And so there's new ways of leveraging data and these quick wins of where it's trying to go. And Jim, you have some great examples here of how to get it right or what happens when you get it wrong.
Well, if you're an organization that has not embraced onboarding or has not started an onboarding process, or if you're an organization that maybe isn't necessarily pleased with the onboarding process they have, here's what the impact is. While most organizations will say they have a attrition rate of maybe 1, 2, maybe as high as 3 or 4%, the reality is we usually don't measure, most organizations don't measure the first year attrition of people they've acquired. Now, if you're a passive acquirer, then your rate of attrition is going to be lower. But if you're aggressive and you're really trying to grow your customer base, your attrition rate could get as high as 25 to 40%. Now, that can be scary at first, but when you look at onboarding, what onboarding can do, they can reduce that by 4, 10, maybe as high as 15% if done well. What is that? The value of that is $400 roughly a customer. How do we get that? Well, about $250 is the true cost of acquisition, all costs included against each account generated. Plus, there's another $200 of income that's lost from those customers that you don't keep. Now, what's important though also is you also lose lost sales. So 64% is lost revenue from sales. So what you have there is you not only have the cost of the acquisition, the cost of the new account income, but you also have the cross-sell value. And then finally, the cost of compliance. So what happens is if you have accounts that continually close, it becomes a compliance issue. As we look at the next slide, what we see is not every organization is necessarily completely happy with their onboarding process. What's interesting about this is about 4% say that their program is very successful. There's another 66% that say it's either successful or moderately successful. And there's still 20% that they say it's not as successful as they liked or is too soon to tell. Another 10%. What is interesting is in all the times I've worked with firms on onboarding processes, nobody has stopped doing onboarding. They keep on having to improve it. So really they point the finger at themselves saying, you know what, we got to get our game better. We're already making the onboarding investment pay. We're just trying to do shortcuts. And that shortcut could be as simple as I'm only going to contact those customers that I think are going to be valuable. Not a good plan. Or I'm only going to contact those customers that are brand new to the bank or the credit union. Again, not a good strategy because those people that are new customers that have also had an account with you in the past or have one now, they're going to be easier to sell. So as we look at that and we look at the next slide, which we talk about benchmarks for success, a word of warning. Here's the benchmarks for success that most people use: account engagement, cross-sell rate, and retention. What's missing there is the sale rate and also, most importantly, customer engagement and satisfaction. So what we have there is we have measurements there that represent what's really good for the bank or credit union. We don't really have what is really good for the customer, and we continue to do this as an industry, and we have to be very careful because as we start to measure what our benchmarks of success should be, we want the customer to be happy with the process. We want them to feel like it was helpful and that it was easy, that it did not take hours out of their day. So I'm going to turn it over back to Sarah and Cheryl to finish up the presentation today.
So one more Kofax case study here, just kind of rounding out, we've talked about multiple different areas: benchmarking, identifying friction, planning. We've talked about the technology, a bit about being agile, and then measuring. So this customer is a Dutch insurance firm, and they were having an issue because their disconnected systems and process was getting in the way of providing personalized communications to their customers. So they're trying to curb attrition. They're trying to prevent lost sales, like you just heard Jim talk about. But they had to go to IT for everything that they wanted. So personalizing communication as a way of communicating with customers, nurturing them, and improving their customer experience was hindered by their broken process and their disconnected systems. And then even the process of having to go through technology to do everything. So they implemented in phase one, as part of their agile process, they implemented Communication Manager, Kofax Communication Manager, which allowed the business users the freedom to personalize their communications to their customers without having to go through IT for everything. And it still allowed them a measure of control so that they still had compliance where they needed compliance, but then it really enabled them to connect with the customers, have that bit of personalization. They stopped the lost sales and actually increased their business by 4 to 5% by using this new system. And then with that, part of that agile practice is that they had a phase two where they were connecting this system with their CRM. So we talked about quick wins and not boiling the ocean. So they really took a phased approach and said, okay, we're gonna go after this problem first and reach out to the customers and communicate with them in a personalized way. And then second phase, we're going to continue to connect our disconnected systems.
So we will have time to take a couple of questions. So if you want to type your questions in, we'll certainly get to them. But I'm going to bring this to a close to give you some key takeaways of understanding what's going on with this digital revolution. And there were 6 best practices here. And the essence of these best practices was to make sure that you put digital to work to ensure that the data and the insights are embedded into an intelligent process. And then the end goal for businesses is so that you can phase out a lot of those manual processes that are really old and analog and paper, and it's also error prone, as I said before. And so a summary there is so that you give access to information and you are more responsive to the customer. And as a result, businesses need to invest in new technologies and processes to enhance that customer experience. And so these are the 6 takeaways. But let's remember, we did have 6 best practices there that was all around benchmarking, identifying friction points, planning and collaborating, understand technology options, think agile, and measure for feedback. So we have more information here, so feel free to put in quickly a quick question that we can answer, or make sure that you get at some of these other materials, or feel free to email or reach out to any one of the participants here. And we certainly are available for any questions. But MJ, do you have one or two? Because we're pretty much at the top of the hour almost.
Yes, we do have one question. Is, out of all of these steps, what is the most important step?
Well, for one, everything is important. Right? So if you don't start with benchmarking, you won't really know how to measure. And if you don't identify those friction points, that's probably one that you really need to do also. If you don't collaborate. So a lot of the benchmarking is extremely important, and a lot of people skip that. And so, Jim, what do you think? Do you think there's any one more important step than any of the rest, or Sarah?
Well, I'll just really quickly, because we're running out of time, is the one important step is to know your data and to use your data and to start. I think a lot of firms, we keep on seeing about 30% of the financial institutions saying they're going to start an onboarding program. We have seen that same percentage for the last 4 years. That means a lot of people have great intentions, but not really good implementation. Just start. Even if it's just a single touch, even if it's just a very simple process, you're going to get real results by thanking the customer for their business.
And we did get we got another quick question, which is, what is the most painful manual processes the banks are seeing? And I do look at it from only the customer perspective. And so the painful processes I see is making sure that they're not able to communicate and share information across the channels. So that's a pain point that has a problem. And we also see the manual processes, the inability to stay in those digital channels, the inability to automate a lot of the processes. And so I think we talked a lot about that, but we do have to understand how we're going to use some of these technologies to strip out a lot of those analog processes, like taking a picture with the camera phone, and then being able to pre-process that and send it to our back-end system so that we're not using a lot of those analog processes.
I would agree.
Anyone? Yeah. I think at this point we do want to bring it to a close, and if there's any more discussion around some of those painful manual processes that anyone wants to speak to, we do, again, have more research out there, and feel free to reach out to any of the respondents here.
Perfect. Thank you, Cheryl. Okay,
Thank you.
So that's all. Oh, sorry. Okay, so thank you. That's all the time we have for questions. On behalf of today's presenters, I'd like to thank you for attending today's webinar, and we hope to see you on another webinar soon. Thank you and have a great day.